All right. Today is Wednesday, October 13th. This is a recap for the stock market activities today. I got a good one for you today, although we are skipping the macro analysis because we have a lot to talk about, and I do not intend in making another 1 hour video. So I will do the macro analysis in a separate video, the headlines of the day video, which should come out later this evening, assuming I don't get any phone calls from work. In the headlines of the day video, we will discuss the CPI, the FOMC minutes, the ongoing crisis at the Biden White House due to the supply chain issues. Likewise, we will talk about the call from Russian President Vladimir Putin about oil prices reaching $100 a barrel. So you should be getting 2 videos today, but for this one, we're sticking to the market's information. I gave you my market bottom conditions to this seasonal correction. Among these conditions is a top in the US dollar, a top in the 10-year yield, and climbing the wall of worry. It appears so far that we do have a technical top in the dollar and the 10-year yield, although we are awaiting a confirmation. The confirmation could happen as soon as tomorrow. When it comes to climbing the wall of worry, we have done significant progress. Yet we are not out of the woods yet, and the likelihood is we're not going to be out of the woods for a long time. Therefore, we are anticipating a technical relief rally. Once again, a technical relief rally in the next few days, and I will share with you in the heat map analysis some ideas. Of course, now that the CPI and the FOMC minutes are out of the way, we will be guided via options expiration on Friday, where market makers will move the market to ensure that the majority of open options expire worthless. Of course, for the market to sustain any rally, it needs more bad economic news. Yep, more bad economic news. This might come as a surprise to some of you, but the market has been rallying for years based on the generosity from the Federal Reserve, stealing billions and billions of dollars from taxpayers and the next generation to grease up the equities market higher via quantitative easing, aka the cocaine operation. Without coke, the market will collapse because current valuations are far divorced from real valuations, and they are being artificially elevated via more injections of dope by the Fed. Bad economic news prompt this policy to stay. However, good economic news combined with the cocaine operation will lead to hyperinflation and therefore less need of coke from the Fed, which will collapse the market back to its true value. Therefore, good news is bad news and bad news is good news. Take, for example, this headline indicating that certain market observers are surprised that the news about a pill treatment for Merck did not cause the market to rally, even though the pill gets us closer to living with the virus and normalizing the economy. This is indeed good news, which will lead the Fed to cut back on the amount of coke it injects into the market every single month, and thus it is bad news for the equities market. If you want a sustainable market rally, you should be cheering for more bad news, perhaps a new variant that would kill us all. But on the bright side, our portfolios will surge from beyond the grave. We can then brag about our gains from the other side. Anyhow, folks, let's move on here to the market's coverage today, and here we go. The Dow Industrial Average closing in the red by about 0.53 points, or a decline of about nothing, closing at the flat line pretty much. The Nasdaq rising higher by about 105.71 points, or a gain of 0.73%. The S&P 500 closing in the green by 13.15 points, or a gain of 0.30%. And what about the sector's performance today? Leading the pack at number 1 and capturing the gold medal, utilities. At number 2 for the silver, technology. The number 3 for the bronze, communication services. Meanwhile, the laggards of the day, or the laggard singular of the day, is financials, and the reason is yields perhaps topping for now. And perhaps the telltale was the outperformance from REITs and utilities yesterday, indicating that market participants were anticipating a top in yields, an upcoming outperformance from utilities, REITs, and perhaps technology, and an underperformance from financials and the inflationary trade. What about the advance to decline ratios? The NYSE 58% advancing versus 39% declining. The NASDAQ 56% advancing versus 41% declining. Moving on to futures, what's going on here? The US dollar is probably topping for now, and if this is true, it will be good news for the commodities market. But bear in mind that the commodities market has been rallying regardless of the recent surge in the US dollar. So will the pause in the rally for the US dollar add more fuel to the fire to the rally in the commodities market, or will we see a pullback, which will be very unusual, by the way, because commodities rise higher when the value of the US dollar goes down. Anyhow, crude oil futures closed pretty much at the flat line for both the WTI and Brent. Meanwhile, natural gas, the dip in natural gas was bought right away. We're seeing natural gas prices rising higher, at least for today, by about 3%. I am suspicious here. I think that crude oil prices will top for a while, but the rally will be resumed once again as we get closer to the winter season. What about softs? We have a rally in lumber. The short squeeze in lumber continues. On the other hand, we have declines here across the board, led by cocoa, OJ, coffee, cotton, and sugar futures. What about metals? A decent day for metals, and the reason is the dollar traded down. Therefore, we have a pop across the board. Gold, silver, platinum, copper, palladium, all trading higher. And perhaps the gold bugs will rejoice finally and will have a relief rally for now. What about meats? Pretty much on the flat line. For live, feeder cattle futures, even lean hogs futures also closing pretty much at the flat line. What about grains? We have gains for soybean oil. I'm still long soybean oil for now. Perhaps I will get out at around 60, but I am anticipating more gains for soybean oil futures. Likewise, rough rice futures also trading higher today. On the other hand, we have declines led by oats, wheat, and corn futures, all declining. Perhaps we have a top in oats, at least for now. Soybeans, soybean meal, and canola futures pretty much on the flat line. Moving on to the big casino, the options market. What's going on here? Leading the pack at number 1, Apple, with about 1 million contracts traded for the name today. About 66% of those were calls. And here it is at number 2, Tesla, the souffle, with about 800,000 contracts. About 42% of those were calls. We have enormous activities in Tesla here. A lot of funny business. Stick around for the charts analysis. We have more unusual trades, by the way, for Tesla coming up in a minute. But before we do that, here it is at number 3, AMD, with about 650,000 contracts. About 66.5% of those were calls. Moving on to the unusual trades that took place in the options market today, starting with the ticker XPEV for XPeng. The Chinese names appear to be bottoming for now. We have more bets here, upside bets for Chinese stocks, including XPeng. In this case, they're buying the 42 calls for the expiration date October 29th, with expectations that the name will pop higher by more than 5% or so by then, and they paid about $1 a piece to enter this trade. All in all, spending about $1.2 million. What about the trade for the ticker QQQ for the NASDAQ? They're betting for a rebound here by buying the 380 calls for the expiration date November 1st, with expectations that the name will pop higher by more than 5.5% by then. They paid about 25 cents a piece to enter this trade. All in all, spending about $250,000. What about the trade for the ticker AAL, American Airlines? We received the earnings from Delta, and again, there are more worries and concerns here that rising fuel costs will start to eat up the margins for these airline companies. Therefore, I remain bearish on these names, and somebody here is betting for more pain to come for American Airlines. They bought the 18 puts for the expiration date November 5th, with expectations that the name will drop down by more than 8% or so by then, and they paid about 30 cents a piece to enter this trade. All in all, spending about $250,000. What about the trade for the ticker AMC? They're buying the 45 calls here, and we have a bullish development in AMC. We will discuss in the charts analysis. Anyhow, they're buying the 45 calls for the expiration date October 22nd, with expectations that AMC will pop higher by more than 19% 10% by then. They paid about 45 cents apiece to enter this trade. All in all, spending about $400,000. What about the trade for the ticker GREE? This is a crypto miner, a Bitcoin miner based in New York. They're bidding for more upside here, but you got to be careful with cryptos here because if the market is about to bottom, we will see stocks popping higher. In a relief rally, we could see the rotation from cryptos to stock once again. But anyhow, somebody's bidding for more upside for this name by buying the 25 calls. The expiration date, October 15th, with the expectations that the name will pop higher by more than 5% or so. And this is, of course, for the expiration date of this Friday. So they are anticipating that the rally in Bitcoin and cryptos will last for at least this upcoming Friday. They paid about 90 cents apiece to enter this trade, all in all spending about $700,000. What about the trade for the ticker TSLA? Tesla, the souffle. They continue to spend millions of dollars buying puts on the souffle with no success so far, but I do believe that some funny business will happen before the expiration day on Friday. In this case, they bought the 760 puts. The expiration date, October 22nd, with expectations that TSLA will drop by more than 6% by then. They paid about $15 a piece to enter this trade. All in all, spending about $9 million. What about the trade for the ticker TAN? This is the solar ETF. Solar names have been surging as of late, and somebody's bidding for more gains to come here by buying the 95 calls for the expiration date, November 19th, with the expectations that the name will pop higher by an additional 8% or more by then, and they paid about $2 a piece to enter this trade. All in all, spending about $1 million. Lastly, at the bottom of the table, what about the trade for the ticker URA? This is a uranium ETF. Uranium is rallying higher due to the news from France. France is resorting to nuclear energy to solve the energy crisis over in Europe. And of course, the French are not so happy with us because the Biden administration stabbed them in the back with the submarine deal with Australia. So perhaps we will see the French making more deals with Russia and China regarding natural gas and uranium. In this case, they're bidding uranium higher. And they bought the 31 calls for the expiration date, November 19th, with the expectations that the URA ETF will pop higher by more than 8% or so by then. They paid about $2 a piece to enter this trade. All in all, spending about $800,000. Moving on to the heat map analysis. What's going on here? The majority of the market is trading higher, with few exceptions, of course. For example, we have airlines trading down today on the heels of Delta's earnings. Likewise, Apple is trading down, not by much, but it is lagging big cap technology names due to the news we got after hours yesterday of downgrading the production number due to the chip shortage for the iPhone 13. Likewise, we have weakness in banks on the heels of earnings from JP Morgan. The earnings report was decent, but perhaps we have a top here in banks. At least for now, yields are also topping. It comes hand in hand with banks taking a break. Other than that, we're seeing gains across the board, specifically for chips, software. We have the high beta names. CrowdStrike, for example, is up over 7% today. The Airbnbs, Dash, all of these high beta names are popping higher. We're about to see a lot of short covering in the days to come, aka profit taking from bears who shorted some of these names. Moderna, for example, is popping higher today due to short covering. The name is down big from the top. A lot of shorts are booking profits. When they book profits, they have to buy the shares back, and therefore popping all these names higher. Now, here is my strategy, and I'm not giving you any financial advice. I'm just telling you what I'm doing. Here's the 1 month heat map for the market. I do believe that we will rotate for this relief rally from winners to losers. For example, I would be booking profits in my portfolio from oil and financials along with the fertilizer names because these names have been leading the market higher for the past month. Now, if I am anticipating a top in energy prices and natural gas prices for now, a pause, then that should bring down these fertilizer stocks for a correction, at least for now. And therefore, I'm taking some profits. I'm closing, for example, my Mosaic calls, already closed them, and I rotated to puts a couple of days ago. So my strategy is taking profits from oil, financials, and the fertilizer names, and I will be rotating some of those profits to buy the dip in the names that got hit the most. Again, I'm not buying these stocks. I am playing a relief rally via buying call options on these names. If the relief rally happens to be sustainable at some point, then I have the options of exercising these calls. I'm looking at names like Facebook, for example, down about 14% for the month. We have names like Qualcomm, Taiwan, down double digits for the month. Likewise, we have T-Mobile down about 10% for the month. FedEx is another name I'm looking at. If we have a top for energy prices, at least for now, you will see FedEx shares moving a little higher in a relief rally. Moving on to the charts analysis, starting with the SPY 30 minutes chart. What's going on here in the S&P 500? Perhaps we're bottoming here as the bearish sentiment reached extreme levels. We might also be looking at a reverse head and shoulder formation in the SPY from a 30 minutes perspective. And if that is the case, then we are anticipating a pop higher that would take us all the way to the sloping descending line of resistance, which could coincide with the resistance level of 438. For now, the support remains 434, the resistance at 438. The market could have went further down on the news of the CPI rising higher again, on the news of the FOMC minutes announcing tapering, but it chose not to do so. And the reason is the technicals are overstretched to the downside, and therefore I see this behavior as bullish for now. Here is a chart of the S&P 500's continuous contract for the futures. Again, we're looking at the momentum indicators. They are bottoming. They are attempting to curl their way higher. We have a bullish candle today. Yes, we do have a triple rejection for now from the sloping descending line of resistance. But we also have a bull flag formation for now. Combine this with the momentum indicators, we are anticipating a pop higher. Perhaps we have more energy now, more dip buyers to move the chart higher beyond the resistance level of 4,384.5 and beyond the sloping line of resistance. Another way we can look at the chart is a formation of an ABC pattern. What if this just another ABC pattern? We are now at the B leg and we're about to form the C leg higher. Moving on to the Qs. What's going on here from a 30 minutes perspective in the Nasdaq? The chart popped higher today in an attempt to break above 360.5, the resistance level. It failed. It went down to gather more energy. It gave it another shot. It got rejected once again, but the chart did not give up by flushing down by the end of the day. The chart decided to move higher, and therefore if the chart can speak, it would tell us, I want to give it another shot at breaking 360.5 as resistance, turning it into support. And therefore, we will give the Qs the benefit of the doubt that this is perhaps a saucer bottoming formation, and the Qs will be able to give it another shot. Third time is a charm, and once and for all, break above 360.5, and we'll take it from there. What about the daily chart for the continuous contract? The Nasdaq. Again, the momentum indicator, be it the RSI or the MACD indicator, both are curling their way higher, moving away from a bearish momentum in an attempt to form bullish momentum. Likewise, we have a bull flag formation for now. You can look at it as an ABC pattern. Doesn't matter to me. It is a bullish formation regardless. And if this is not a head fake, we should be able to break above 15,000 for now, and then we'll take it from there. If the chart gets rejected again from 15,000 by the end of the week, then we got a bigger problem, but we'll take it one day at a time. Here's a chart for the IWM. 30 minutes chart, gapping lower in the morning, but immediately dip buyers are showing up and the chart broke above the descending line of resistance, the sloping line, and now it is trading above that line, indicating that it is just a matter of time for the IWM to break above 223 as resistance and turning it into support. The challenge remains, what will dip buyers buy? Assuming we have a relief rally, what will dip buyers buy? If they choose to buy big cap technology names and brush the cyclical names, the reopening names aside, then the IWM will lag the Nasdaq. And here it is, the most important chart to watch, the dollar index. We have a reversal candle, and it is about to be confirmed by the momentum indicators curling down We're about to have a crossing on the daily for the MACD indicator, but the ultimate confirmation will be breaking the support of 93.7. If that happens, we have a confirmation, and if the dollar goes down, this will be good for commodities and the inflationary trade on paper. When you look for a rebound, you have to look for the casualties of this recent pop higher in the dollar. Was it crude oil? No, it was not. It was actually in metals, specifically precious metals. Speaking of, here is the chart of gold. Gold rising higher, pop higher. The bull flag is playing out, and if the dollar and yields about to pull down, pause the recent rally, then the relief rally in the market will be evident in gold prices. And it could lead us all the way to give it another shot at breaking the resistance, the Fibonacci resistance at around 1,835. As you can see, the chart tried 3 times, the 3 amigos, and it failed and went down. Perhaps we have the energy to finally crack above that number. I doubt it. I think gold will pause there, but it all depends on how the dollar and yields trade. And therefore, we move on to the chart of the 10-year yield. Is it a top? Is it a fake? Who knows? But for now, we have things to look forward to. For example, the momentum indicators, the MACD and the RSI, are both curling down. We're about to have a crossing to negative territory in the MACD. And if this happens, it is an indicator that the bullish momentum that led yields higher, the recent rally in yields, will pause for now and shift into bearish momentum, which will cool off the rally in yields, and this will be welcome news for the Nasdaq and the big cap technology names, but specifically the high beta growth and momentum names. Here's a weekly chart for the TLT. Lots of repair here. We have a green candle for now. We have 2 days to go for the week. Yes, we have a crossing in the MACD indicator indicating that we have bearish momentum in the TLT in the long run. On the weekly chart. But on the daily, we could see the TLT popping higher again all the way to 149. But again, when we say it is a relief rally, this means a pop in the TLT will be transitory. A decline in yields will be transitory, and thus the relief rally. Moving on to the VIX 4-hour chart, we had a mini baby pop today. When you look at the MACD indicator, it was a small pop, resulting in about 15% gains in the VIX and a slight decline in the SPY in the morning. For now, it appears that the pop is over and the MACD and the VIX is about to turn negative once again. What does that mean? Perhaps the VIX will go down all the way to 16 to close the gap, and this will lead the SPY to rally higher in a relief rally. What about Apple? What's going on here from a daily chart perspective? Again, the MACD indicator is bottoming for now, indicating that we're about to have bullish momentum. The problem is, this name got hit with bad news, and as Apple goes, so will the market. The market will not be able to rally without Apple trading higher. So unless traders and investors brush the bad news aside and they buy the dip in Apple, the rally in the market, even if it is a relief rally, will not be sustainable. The confirmation for any bullishness in Apple will be closing the week above 145. And here's a 30 minutes chart for Tesla, the souffle. What's going on here? A lot of funny business. You cannot trade this chart technically. It has a lot of conflicting technical signals. This chart has been moving solely based on funny business in the options market. For example, today we saw a pump and dump right before the bell. Somebody is doing funny business here. And I do believe that the funny business will shock everybody before options expiration on Friday. Something big will happen here. And the reason is, when you look at the options grid, the put option trade with the highest open interest is the 750 put with about 100,000 contracts open right now. The last thing that the market maker wants is for Tesla shares to drop below 750. They will lose a lot of money if these options are exercised. Likewise, when we look at calls, the calls with the highest open interest for now happen to be the 800, the 810, and these are in the money for now. So put yourself in the shoes of the market maker. What do they want? They want the majority of open contracts to expire worthless, calls or puts, and therefore the best case scenario for them is to park Tesla between 750 and 800. The problem is, what if there is a whale holding the bag in the 750 puts and they're about to do funny business to push the name down? to get out of the trade with minimal damage. We will see a lot of funny business here. I would stay away from this one. I closed my puts that I had. I might play them again, but for now, I got a big bag of popcorn and I'm watching the show. Moving on to tulips. What's going on here in BTC? The chart remains bullish. Nothing wrong here. The momentum indicators are reading stretched levels. What does that mean? We are anticipating a top and a pause for the rally for now. It could happen hand in hand with the rotation from cryptos to buy the dip in the stock market. On the other side, what if FOMO creeps in and we have people now buying BTC and other cryptos because they have FOMO? This is the dynamic for now until we have a resolution by a pop higher or a flush down. We're not going to know the answer. But you got to trust the technicals here. If you made a lot of profits buying the dip in cryptos, specifically in BTC at around 40,000, 42,000, what is the harm of taking profits right now? Something you got to think about. Those who are in the FOMO camp waiting to buy BTC, you might want to wait for a dip here because for all you know, FOMO is going to creep in. You buy the shares from somebody who bought the dip earlier. He or she gets to capture the profits and you end up holding the bag. Perhaps we have better prices coming here if we see a rotation from cryptos to stocks. What about AMC? What's going on here from a 30 minutes chart perspective? We had the three amigos flushing the chart down, and I told you any closing below 36.5 will be a sell signal. Any closing above 39 will be a buy signal. Now the chart went down all the way to 36.5, even crossing that line slightly, although it didn't close the day below the line. And now we have a double bottom formation followed by a bull flag. And the likelihood is we could see AMC popping higher all the way to 39. If it does cross above 39 and it closes the week above 39, it will indeed be a bullish signal. But for now, you can play a pop higher all the way to 39. We saw a lot of options trades for the expiration date Friday, this upcoming Friday, buying calls on the 39s and 40 calls, anticipating the move higher. But at the end of the day, it all comes down to the market maker. When we talk about options expiration on Friday, the market maker wants to park the chart at the maximum pain level. So what is the maximum pain level here for AMC? Here's the options grid. The calls with the highest open interest happen to be way out of the money, the 45 calls with about 21,000 contracts open for now. The likelihood is those options were opened weeks ago and those traders are holding the bag for now and pretty much already surrendered. And they forgoed this trade. They're not even looking at it. They lost money and it's over. So there is no risk here for market makers to push AMC all the way to 45. They have to close the week below 45 to ensure the maximum pain level, for call holders at least. What about puts? The puts with the highest open interest happen to be the 34 puts, with about 14,000 contracts for the 34 puts. Therefore, the market maker has a lot of flexibility here to close AMC anywhere above 34 but below 45. It's a wide range and therefore you gotta follow the technicals. Here are some bonus charts starting with the ticker MOS Mosaic. I tweeted a few days ago that I am anticipating a top in natural gas prices, at least for now, a pause, and that will come hand in hand with a pause in the rally in Mosaic. Therefore, I closed my calls and I bought some puts. The chart so far appears to be topping. We have extremely stretched readings on the momentum indicators, the RSI and the MACD. We have a confirmation for the reversal and therefore I'm keeping the put options trade, although it closed half today and I'm letting half ride. This is the house money. Let it ride if we have more downside. But I caution from being too bearish against this name because when we switch to a weekly chart, as you can see, the RSI is closer to an overbought reading, but it could go higher. On the other hand, the MACD indicator is starting a new positive momentum ride on the weekly. So the likelihood is we will see a pause, a correction, a small one, before the rally resumes for Mosaic and natural gas. Again, this is a fertilizer name. It's not a natural gas name, but we trade fertilizer stocks as proxies for natural gas. Another thing to keep in mind is the monthly chart for the ticker MOS Mosaic. You might remember the massive rally exceeding over 1,000% gains in the great energy rally from 2006 to 2008. And I remember back then I used to joke that there is a lot of money in shit. And I was right because natural gas prices exploded higher, and therefore, by default, these fertilizer names also popped higher. Who's to say we're not going to be in another great energy rally to come? We're not through with inflation. We're not through with the supply chain issues. We're not through with the energy crisis. We're not through with the Fed's accommodative policy. And therefore, once again, if this winter season, the forecast comes out indicating that the season will be colder than expectations, watch out for a massive rally here in these names. What about Facebook? I bought some calls today. From a daily chart perspective, the name is beaten down severely, and we have extreme oversold conditions here on the momentum indicators, the RSI and the MACD. Therefore, we're waiting and anticipating a pop higher, a short covering rally. The problem is, whatever rally it is, it could be just an ABC pattern, and the bearishness will resume in Facebook. Because on the weekly chart, the pain just started for this name. The momentum indicators are moving down from extreme elevated levels, meaning that the correction is not over in this name. But on the daily, we're waiting for a relief rally, a short covering rally. And then the shorts will pile on Facebook again and drive it down. Here's a monthly chart for Facebook, by the way, and it is trading on a very steep trend line. The likelihood is this line will be broken, and as you can see, the MACD indicator is topping for now. So on the weekly, on the monthly, the picture is not good for Facebook. On the daily, it's okay for a relief rally. Here's a chart of the ticker ADBE, Adobe, another name that was severely oversold, and it is rebounding higher on the daily chart. The momentum shifted from negative to positive once again on the MACD indicator, and therefore we are expecting, if this relief rally happens, one of the names that would benefit the most is Adobe. But watch out here on the weekly and the monthly, the name remains overstretched to the upside. Lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have, per usual, the weekly jobless claims. For now, these are not going to be important. The market is fixated on the BLS payroll report, which came out way below expectations. We are now already beyond the tapering discussion. Tapering is already confirmed from the FOMC minutes, so we're not going to worry about the number too much. But we're going to worry about the PPI, the Producer Price Index. And I hold more weight in the PPI versus the CPI, aka the CPI, because the PPI is a leading indicator, and the CPI tends to underestimate the true nature of inflation. But I caution from putting too much weight on the PPI's reading because the technicals for now are going to be supreme. An options expiration on Friday will guide the market for now. We will get the PPI reading, the algos might do their thing, but we will keep that reading in the back burner, and we will revisit it once again when the discussion about inflation is resumed. Folks, this is all I got for you for now. Thank you for listening, thank you for watching, and I will talk to you again soon. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.